Welcome to Marketing News for the week of January 7th, 2026. We're covering 3 stories this week that all point to the same thing. Owned channels are eating rented platforms for breakfast. Paid newsletter subscriptions jumped 138% last year while everyone was freaking out about social media algorithms, and authenticity just became non-negotiable. Let's get into it. Our first story: email newsletter hosting company Beehive just dropped their State of Newsletters 2026 report. And if you still think email is dying, you're not paying attention. Publishers on their email platform sent 28 billion emails last year. Open rates, 41%, and climbing. Paid subscriptions, 19 million in revenue, up from 8 million the year before. That's 138% growth, while the rest of digital marketing is trying to figure out what the heck happened to organic reach. Here's my favorite stat. New newsletters launched in 2025 hit their first dollar in just 66 days, 2 months from launch to monetization. That's not hustle, that's infrastructure. Now, here's why this matters beyond the numbers. Social platforms spent 2025 reminding everyone that you don't own your audience. Algorithms change, policy shifts. Platforms dying overnight. Email, you own the list. No intermediary, no algorithm deciding who sees your content. Just you and the people who actually want to hear from you. Second, AI is flooding every channel with mediocre content, which means quality and personality just became 10x more valuable. The newsletter category is crushing it right now. Podcasts, history, religion, and humor. They're hitting 45 to 53% open rates. These aren't broad topics. They're identity-driven, passion-focused niches where readers actually care. And third, monetization got real. Newsletters aren't side projects anymore. They're media businesses with multiple revenue streams: paid subscriptions, ad networks, boosts, and digital products. The smartest operators are building entire ecosystems around email: podcasts, events, communities, physical products. Email is the hub. Everything else amplifies it. If you own a brand, you need to be doing the same types of things with your email list. One more thing worth noting. Newsletters using Beehive's recommendations feature grew 2.7 times faster. Translation: cross-promotion works. Discovery still matters, but it's happening between creators and brands, not on platforms. Your marketing move? If you're a marketer sitting on expertise, an audience, or a niche you actually care about, launch a newsletter in 2026. Not a marketing tactic, as a business asset. Commit to a cadence. 47% of successful newsletters publish weekly. Pick whatever rhythm you can sustain, daily, weekly, monthly, and protect it like your brand reputation depends on it. The newsletters winning in 2026 aren't just writing, they're building events, communities, courses, products. Email is distribution. What you build on top of it is where the real value lives. Our second story: B2B budgets are up and brand just became priority number 1. Here's where this gets interesting. B2B marketers are heading into 2026 with more money and a totally different playbook. Tenfold's 2026 marketing budget blueprint just came out, and 69% of B2B marketers expect budget increases. After years of do more with less, that's a massive shift. But here's what shocked me. Brand awareness is now the top investment priority at 21%, followed by PR at 14%. This isn't just good marketing. This is strategic repositioning for an AI-filtered world. Susan Thomas, CEO of Tenfold, nailed it when she said, "In an AI-filtered landscape, the organizations that invest in credibility, recognizability, and consistent content performance will be the ones that win attention and accelerate growth." Think about it. When ChatGPT, Perplexity, and Google's AI overviews are curating answers, brand recognition becomes the filter. If nobody knows who you are, you're not making it into the AI-generated shortlist. You're just noise in the training data. And marketers get it. 56% now have KPIs specifically for brand awareness. 89% believe their budgets will actually support revenue goals. That's a record-level alignment with the C-suite. Here's my take. This is what happens when performance marketing finally hits its ceiling. You can't growth hack your way past commoditization. You can't MQL your way out of trust deficit, meaning you can't solve a brand problem by just generating more marketing qualified leads. At some point, you have to build a brand people actually recognize and believe in. Your marketing move? If you're running B2B marketing and you're still putting 80% of the budget into bottom funnel tactics, you're about to get crushed. Here's what to do instead. Invest in brand now, not when lead gen dips. By the time you're in trouble, it's too late. Brand takes time. The companies dominating in 2026 are the ones that build brand equity right now. That means executive visibility. If you're a CEO, CMO, product leader, you want to be posting on LinkedIn. You want to be appearing on podcasts. You want to be talking at conferences. If you're not one of these folks, but you're in charge of it, get them in these places. Human voices beat corporate messaging every single time. And it means consistent content that builds authority, not just blog posts, original research, strong opinions, taking a stand, the stuff that makes people remember you. The old playbook was generate demand, capture leads, convert. The new playbook is build brand, generate inbound, accelerate deals, same outcome, different physics. Third story this week, and this one's good because it's the market finally calling BS on fake brand personalities. Marketing Brew just published their 2026 social trends report, and the consensus from CMOs and agency leaders is unanimous. Brands trying to be your chaotic friend on social media, that era is over. You know what I'm talking about, the oops, our intern posted that energy. Brands roasting each other for engagement, the whole were so random and relatable. It was fun for a minute. Now it's exhausting because AI on social media overdoes it, and it's not authentic anymore. George Felix, CMO of Chili's, said it perfectly. The brands that show up with real voice rooted in who they are will continue to win. That requires experts in the space that use instinct and speed and are allowed to take risks. Translation? Authenticity beats performance chaos. And here's what's actually happening. 1, brands are building distinctive, ownable voices, not just copying whoever's trending this week. That means knowing who you actually are and showing up consistently with that identity. 2, creator partnerships are getting serious. We're talking mega creators with tens of millions of followers signing long-term deals, co-branded products, actual company roles, equity stakes, not just one-off Instagram stories. Vivian, too, became SoFi's chief of financial empowerment. That's the model now. 3, affiliate payment structures are becoming the default. Brands are tightening budgets and marketers have to prove ROI. Pay for performance isn't optional anymore. And 4, social and experimental marketing are merging. People are craving in real-life experiences. The smartest brands are building social strategies around events, festivals, and in-person get-togethers, not content calendars. Here's my take on this. The market correction we're seeing is long overdue. For years, brands chased virality over value, trends over trust, and it worked until it didn't. AI can replicate viral content in seconds now. What it can't replicate is real brand voice, a real relationship, a real community. Your marketing move? If your brand's social strategy is still let's go viral or let's jump on this trend, kill it. Here's what to do instead. Define your brand voice and stick to it. Not the voice you wish you had, the voice that's actually true to who you are. Then show up with it consistently across every platform. No pivots, no trend chasing, just you. And treat creators like strategic partners, not media placements. If you're working with influencers, go long term. Co-create products. Build something together. The transactional creator economy is dying. The partnership economy is just getting started. And invest in the experiences. If you're a B2B brand, that's events, dinners, workshops. If you're a consumer brand, it's pop-ups and festivals. The content you create from those experiences will outperform anything you post sitting at your desk. Bottom line, the brands winning in 2026 are the ones brave enough to be themselves. One more story this week because it's worth watching. Google just made a policy change that signals where advertising might be headed. Starting January 21st, 2026, Google Ads will allow advertising for prediction markets in the United States, but only for federally regulated entities. If you're not familiar, prediction markets are platforms where people trade contracts based on the outcomes of future events, elections, sports, economic data. Think of it like a betting market, except the prices reflect the crowd's collective forecast on what's going to happen. Platforms like Kalshi and Polymarket. Google's been extremely cautious about these platforms historically. Now they're opening the door, but with guardrails. You need to be authorized by the Commodity Futures Trading Commission as a designated contract market or registered as a brokerage through the National Futures Association. Then you can apply for certification through Google. This is a niche. Most of you aren't running prediction market platforms, but here's why it matters. Google is starting to open advertising to regulated financial products they've historically kept locked down. Your marketing move? If you're in fintech, crypto, investing, or any adjacent regulated space, pay attention to these policy shifts. Google opening up prediction markets might seem small, but it's part of a broader pattern. As these alternative financial products mature and get regulated, advertising policies follow. The question is, what's next? CBD, DeFi platforms, certain crypto products? When policies change, the brands that move fast get a massive competitive advantage. So if you're in a regulated category, track Google and Meta's policy updates closely. Being first to market when the door opens can be the difference between owning a category and fighting for scraps. All right, here's what ties these stories together. Owned channels are winning. With email, you own your audience and don't rely on an algorithm. No platform risk, just direct access. Brand and authenticity are non-negotiable. B2B budgets are going to brand because performance marketing hit a ceiling, and social is ditching performance chaos because audience can smell fake a mile away now. The playbook is changing. Build real things. Own your distribution. Show up as yourself. That's it. That's the strategy. If you're still renting attention on platforms, chasing virality, or waiting for the next growth hack, you're late. The future belongs to marketers who build, own, and show up as themselves. That's this week's marketing news. Email is crushing it, budgets are up, authenticity just became the price of entry, and Google's opening categories that they previously didn't for their advertising platform. All the links are in the show notes if you want to go deeper. Thanks for listening. Your marketing move.